Good morning. A lot of attention will shift to a different screen as our man in blue look to end the Aussie yellow fever, which has given them the nightmare for long, especially in the World Cup. Back to the market, it was relaxing to see green on Wednesday as equities managed to recover smartly. A combination of good long built-up and short covering did the trick. In fact, the provisional numbers for FIs and DIs were quite encouraging. Even the trading volume and turnover picked up from the previous 2 days. F&O indicators too are pointing to some improvement in the sentiment. This week's minor pullback has brought the Nifty near 50 DMA of 5,505. We could see the index heading towards 5,600 if it sustains above this level. So the start should be a good one as global cues are supportive. Markets across the US, Europe and Asia are holding their own despite apprehensions on the ongoing turmoil in Middle East and North Africa, Japanese nuclear problems and the collapse of government in Portugal. Crude oil futures have inched higher while gold futures zoomed to a new record high in New York. Copper gained well over 2%. Watch out for the weekly inflation numbers. Don't expect big gains in the short term as there is likely to see some selling pressure at higher levels. Keep expectations low to lessen the chance of any disappointment. The overall outlook is cautiously optimistic and much will hinge on the trend in the offshore markets. Any signs of softening in domestic inflation could come in handy. FIs were net buyers of Rs 3.12 billion in the cash segment on Wednesday according to the provisional NSE data. The domestic institutional investors were net buyers of Rs 11.11 billion on the same day. FIs were net buyers of Rs 6.98 billion in the F&O segment. The foreign funds were net buyers of Rs 3.13 billion in cash segment on Tuesday as per the SEBI website. Mutual funds were net sellers at Rs 24 million in the cash segment on the same day. Shares of Lovable Lingerie will list on domestic bourses today. The issue price has been set at the higher price end of the price band of Rs 195 to Rs 205 per share. The issue was subscribed 35.21 times. Moving on to recommendations, the technical calls for the day are: we advise going short on central bank March futures below Rs 133 with a stop loss of Rs 136 and for the target price of Rs 127. We advise buying Syntex Industries in the range of Rs 140 to 141 with a stop loss placed at Rs 137 and for the target price of Rs 149. Our derivative strategy for the day are: short TV18 March futures in the range of Rs 73 to Rs 74 for the target price of Rs 69 and with a stop loss placed at Rs 75.5. Long SCI March futures in the range of Rs 105 to Rs 106 for the target price of Rs 110 and with a stop loss placed at Rs 103.5. Thank you. Wish you have a great day ahead.